VOIE waterfall on today's session. Today we have Ashley Wood, Vice President of Mortgage Verification Services at Equifax. Hi, Ashley.
Hello.
We also have Conor, Hendershot, Director of Mortgage and Banking. Good morning, Conor.
Morning, everyone. Glad to be here.
We also have Yaron Oren, Chief Revenue Officer at MeasureOne. Good morning, Yaron.
Good morning.
And last but not least, we have Anir Pradhan, Chief Operating Officer at EmpInfo. Good morning, Anir.
Good morning. Hello, everyone.
So first off, thank you guys for joining. I can't say how excited I am to have you on. There's a couple of different reasons. We've been working hard together on the VOIE waterfall that BeSmartee is rolling out. We could not have done it without you guys here on the call, amazing partners and best of breed vendors. The second reason I'm really excited is this is an amazing example of what I call co-opetition, especially in our mortgage space. We have competing vendors on the call, but they're working together to deliver value to your business as a lender, your platform as a mortgage tech provider, and to your consumers at the end of the day. So kudos to everyone to be on this call and to be part of the solution. Thank you all. So moving on, today's topic is to be very precise. We're talking about VOIE automation. Right, we all do VOIE as a necessary step in the mortgage underwriting and origination process. But what we're going to talk about today is bringing it up front into the mortgage POS. At first glance, you might say, well, this is a cost. It is a cost, but it's a cost that drives downstream benefits. I want to talk about that for a second. By automating this task, we do it for both consumers and lenders. The consumer and loan officer experience gets optimized and streamlined. That's number one. We then get accurate income and employment information that gets pre-populated into 1003, and that data gets driven downstream into the product and pricing engine, gets driven down into the automated underwriting, loan origination system, and all the other processes that you as a lender have to process, underwrite, and close and fund loans. We're excited to bring this to the top of the funnel to drive further downstream efficiencies. Now, by doing so, we estimate that you could reduce your VOIE time and cost by up to 75%. And Ashley and Conor, you have some good stats, if you wouldn't mind sharing here.
Absolutely. So by using the work number, a lender can expect to save at least 5 days on average during that closing cycle. And again, that's at minimum. Some lenders, what we do see, save more time, just depending on what their prior process was. And really, when you spoke earlier, Tim, about how do lenders and what are lenders looking at in terms of point of sale, it's really centered on acquiring more leads up front. And by using this automation and verification tools, you do get more of those leads and you do turn that into a better process downstream, which shortens that overall closing cycle. Conor, I'll let you handle the rest of it.
Thanks, Ashley. I think great overview with respect to some of the reductions in time spent. I think the other thing that we're all excited about in terms of bringing automated verifications into the POS platform is borrower conversion. So I think all of us have seen when you decrease friction as part of the verification process for a borrower, you increase borrower pull through and then leading to more loans originated. So we've seen percentage point increases by actually pulling this into a POS implementation instead of kind of further downstream. So super excited about that impact as well.
Great, thank you, Ashley. Thank you, Conor, for those words. So moving on here, I'm going to take just a couple slides to talk about the BeSmartee VOIE. Okay, you don't have to be a BeSmartee customer to take advantage of this. It can be any platform. But at its essence, it's a three-step waterfall. The first is what we call instantaneous solution. The logos that you see on the right side of the screen there from Equifax, from EmpInfo, TrueWork, these are the instantaneous solutions. What is instantaneous? Well, instantaneous means with no input from the consumer, no input from the loan officer, this process could just simply be automated. We take the data from the 1003, we automatically ping these vendors, we bring back the data, we populate, we drive it downstream. Think automation check marks, just down the line. Now, what makes this, when you're looking for a VOIE solution as well, think about configurability. business models change, economic environments change, channels origination changes your strategy. One of the things you want to look for is the ability to quickly and easily configure the providers you want to use with that circumstance, that business objective, and the order in which you want to use those providers. Every provider has their strengths. You want to capitalize off those strengths, again, based on your objective for that channel, that market environment, that relationship with a real estate firm, etc. So first and foremost, instantaneous. This is the creme de la creme, where things just happen automatically. Now, not every consumer is going to have a hit on instantaneous. We'll talk about hit rates a little bit later. Then we go down to what we call the waterfall 2, the credentialed solution. What this is, at essence, is essentially a consumer keying in their credentials, and then MeasureOne, TrueWork, TrueV, Pinwell, Argyle, these other credential providers will be able to take that data, reach into the systems, pull back that data, and again, pre-populate the 1003 and drive that data downstream to create efficiencies and operational excellence for your organization. Again, when we think about configurability, it's critical. Markets change, right? So on the same token as above, you're able to configure the providers for the best objective you're reaching, change the order, and change the providers as you need to meet your objectives. Now, unfortunately, right, if none of that works, then we're back to a manual solution. And the manual solution is what we deal with day in and day out today. So you make a request, someone uploads it, maybe there's some OCR, you're extracting data, maybe there's not, you're manually transferring the data and auditing files and processing underwriting. Well, what's exciting, and I want to drop this little nugget here, is there's new ways to do manual verifications. So save that thought. We're going to have our guests here today talk about what these new manual methods look like. So for the rest of the seminar, what we're going to do is we're going to go through an FAQ. I'll be asking the questions. Our guests will answer them. It's not about BeSmart. It's about the amazing data and service that you'll get from our guests on today's panel. With that said, let's jump right into the first question. So how does each partner solution contribute to the overall objective of reaching up to 75% cost and time savings? I'll go ahead and hand it off.
Thank you, Tim. I will jump in here first. And I know I mentioned this a little bit early on with using the work number. I mentioned this just briefly a little bit ago. You can expect to save at least 5 days on average. And how do we really do that with the work number? Tim mentioned the waterfall. Although we cannot control what lender chooses which waterfall approach to use, we can tell you that with the work number, we have instant access to employment and income data from over 2.5 million employers, and that's comprising over 535 million records. So providing that instant hit up front is then how we can contribute to that overall objective of saving.
So I can jump in as well. So at MeasureOne, I think at a high level, we save you time and money by automating the verification process. More specifically and relative to other automation solutions, our key focus and strength is on coverage. So we see it pretty simply: the better the coverage, the more verifications we can complete automatically, and the more time and money we save you.
Let me jump in here as well. And thanks for the question, Tim. So let me answer this question both, if I can, from time and cost perspective. EmpInfo is a verification as a service platform that requires no borrower credentialing. So from our standpoint, from the lender standpoint, there's no waiting for the borrower to provide any information. So sometimes there is a back and forth in obtaining that information. So there's a little bit of time savings over there. Additionally, what we do is also we immediately look to see if there is an instant hit through our network. And if there is an instant hit, again, that's additional time savings for the lender. And then beyond that, you talked briefly about manual verifications, Tim. Yeah, we do have, if there is a no hit within seconds, we launch our on-demand solution. So there's, again, no waiting for the on-demand or the manual solution, which we have automated. And we do get the response rates from employers within some of them within seconds, some of them within minutes. And yeah, in some instances, you have to wait a few days as well. But all in all, it is a much faster way to do it than a lender can do on their own. And in terms of cost, we have automated the system to reach employers with no human interaction. So there are savings then that we pass on to lenders as well. So from a cost standpoint, it becomes a lot more effective too.
Yeah, and I think just to add the perspective from Argyle here, I think we think about automation in two ways and simplicity in two ways. One is from the borrower perspective, and the other is from the lender or operational perspective. So I think all of the verification solutions here are great in a way because no longer are you asking borrowers for manual documentation, asking them to fill out forms, things like that. Instead, you're either having an automated instant hit or a credentialed approach to provide that information. So significantly lower friction relative to kind of the traditional manual solutions. As well as on the back end, right? If you have structured data to answer the questions that you're getting asked from Fannie and Freddie to fill out that 1003, 1005 form, for example, right? You're able to automate operations on the back end. And so I think, clear time savings on both borrower end as well as lender end there. And then I think Yaron was hitting on this to some extent, but I think a really exciting piece about the credentialed solution here is that we can serve as data transmitters as opposed to resellers, and so have a very different economic model, which enables savings both with respect to operational time as well as versus other solutions.
Thank you, guys. Conor, you bring up something interesting, right? I want to reiterate is let's not lose sight of the borrower experience. Right? We're very focused in today's environment on cutting costs, and we also always have to raise our hand and ask ourselves, okay, at what cost are we cutting? We all want to save money. And operate it more effectively, but are we going to deteriorate that consumer experience that we've all worked so hard for over the last 2 to 3 years? And there's still more work to be done. Let's not take any steps, backwards there. So moving on to the next question here that we often get is, so when using an instantaneous D1C approved report, right, the VOIE automation we've been talking about, waterfall number 1, is a Form 1005 still required?
Tim, if all of the verification of income, if that has all the components needed, the income breakout within 35 days, et cetera, then no, you do not need a 1005 form. But if something is missing or needs to be clarified, then you may need that for additional details.
Yeah, Tim, so
oh, go ahead, Anir, go ahead.
Yeah, so in our case, we do provide the data that we provide through our platform. It meets the requirements of the GSEs. Lenders are obtaining this report, the report on Form 1005 directly from employers or through other vendors like us. From their standpoint, since it is kind of a hybrid where it is through vendors and some of it is directly through employers, it's not practically possible to have every report certified by D1C, but what we do provide at EmpInfo is the breakdown that is consistent to all the GSE requirements, such as a few years of breakdown, base pay, overtime, bonus, commissions, and so on that's required in the forms.
So what I'm hearing is, in an instantaneous approach, if the data is sufficient, the Form 1005 is not necessary. So this does beg a question does anyone have any stats on if you take 100, 1,000 pools of instantaneous data, is there a certain percentage where there's good confidence that this bulk is going to be complete versus this bulk, which may be partially complete, almost complete?
I can speak to, so Tim, when we onboard new employers, right, we have 2.5 million employers contributing to our database. And each of those partnerships have a little bit of a different arrangement, but with the work number, we do have a standard of how that data is onboarded into our systems. And we do try to ensure that all of that data is filled out. We get all the details that are necessary, because we do realize that that is very critical to a lender's process, is gaining that D1C, making sure that our report satisfies that through the GSE requirements.
Great, thank you, Ashley, appreciate that. Okay, so we're gonna move on to the next question here. That's usually a quick follow-up to that first question. So when using a credential solution, this is again waterfall number 2, is there enough data to satisfy the 1005 and the supporting documentation required to support that Form 1005?
Yeah,
So go ahead.
feel free. Go ahead.
So the short answer is yes. So payroll systems, which are our primary data source for VOIE, are rich with data such as income breakdowns, employment dates, job titles, and much more. It's always up to date, and it is typically plenty sufficient to satisfy Form 1005.
Yep, seconded. I think one of the interesting pieces here is we are all pulling from source data, at least for kind of the instant and automated verification solutions that we provide. And Yaron, I think you said this well a few days ago, but we wouldn't have a business if this was not the case. So again, yes, as the short answer.
Great, great. Yeah, we get that question often because lenders, they're going to pay for something, right? They want to make sure that the data that come back actually saves some time, right? And that's great answers and good insight. Thank you all. So moving on to the next question here is, how does each partner solution ensure accuracy of income and employment on the first pull and into closing and beyond? And if we can deep dive a little bit, the methodology that Ashley spoke on, kind of how employers are on board, but I think the audience would like to understand this a little bit more.
So I'm happy to kick us off. So at MeasureOne, we think of accuracy in 2 ways. So there's accuracy in the sense of up-to-date data. So we've already sort of touched on this. With the credentialed model, we are pulling data in real time, every time from a primary source. So there's no better way to ensure that the data is up to date. We also think of accuracy in terms of the performance of our technology in extracting data from the primary source, and more specifically, source documents such as a pay stub. So we ensure 100% accuracy through proprietary tech we've developed called deterministic document processing. So instead of using AI or machine learning, which is sometimes prone to errors, we write unique parsers for every different pay stub or other document format that we encounter. So this is laborious, but something we've become very good at and able to do at scale, and it ensures 100% accuracy every time.
I can step in as well. So from Tim, from our standpoint, we too measure accuracy in a very similar way. Accuracy or data quality is really measured in terms of recency or freshness of data, completeness of data, and the source from which we pull the data from. So if you start with the source, our data is as accurate as it can get because we pull the data directly from the borrower's employer's payroll systems and HR systems. So there is no interpretation of that data. It is directly from the source itself. When it comes to the freshness or recency of the data, our employment status data is as fresh because we pull it from the HR system. So it's as fresh as, I would say, the same day, right? When it comes to income data, the data is whatever is resident within the payroll system, and that's usually the last payroll cycle. So it could be as fresh as the last week. It depends on the last payroll cycle as well. So that's the second metric, and the third is the completeness of data, where we do have fairly strong quality controls when we onboard employers through our process automation. So we ensure that the data that is being provided to us is fairly complete, especially in the mortgage industry, as we want to ensure as per the prior question, we can complete the data as per the Fannie 1005 forms as well.
And Tim, I'll jump in here. Anir, you had a great setting stage for me here on this one, but with the work number, and just like a lot of my competitors here on the phone, we are FCRA compliant. And so what that means is we cannot alter those payroll files when those are being uploaded into our solutions or into our systems and our databases. However, we do have really good proactive approaches of when we look at accuracy, we look at it in twofold. A lot of my competitors just spoke about this too, but it's data completeness and data currency. So we're putting those on our database as we're receiving those payroll files. And we're also ensuring that that data is complete and filled in partnership with how we like to look at that gold standard of what we would consider an acceptable file to be loaded into our system. So as I mentioned, we've got dedicated teams focused on this. We take a very proactive approach. And we do take this very seriously because we do want to ensure that it meets all of those requirements to fulfill a true verification of income or employment report.
To second all of that, I think one, it's exciting to be pulling from source data. So you have kind of single source of truth. Then there is the data completeness side of things, as well as the data recency side of things. I won't touch on that, as all of you have done so very well. I think, just to potentially comment on kind of the complexity of what is done on the back end here, so that we all understand kind of what the value that these all of these folks on the line provide. If you think about kind of payroll platforms and employment platforms, no one looks like the other. And so there is a bunch of work done to make sure that categorizations and definitions are standard across any data that is delivered. And to Ashley's point, while we are not transforming data, we are transmitting and normalizing it such that it is very easy for lenders as well as the GSEs to digest. And I think that's the really important piece as well when you think about some of the value associated with this. If you've ever been a originator and stared at a pay stub, you'll know that none of those look alike. That's kind of what we deal with, and a large piece of the value that we provide as well, and part of the time savings.
Got it. Yeah, it's interesting. When we talk about source data, the non-transformation of that data, the transmission of data, and everyone brought up the same point as well, is interpreting that data. The actual use of that data is standardized, which is powerful. That's not something that I actually thought about, but it certainly makes sense, right? As a human being, at the end of the day, has to make use of that data. And if it's not standardized, if I can't think through that, can't count on fields being there all the time where it's supposed to be, makes my job a little bit more difficult, right? So that's a great point to bring up. Thank you, guys. Okay, so moving on to another question. So this question came through the audience. What is the average or expected hit rate of receiving applicant income employment info versus applicant information being unavailable in the database? I'm sure you guys get this question all the time.
So Tim, I'll jump with our wide network, and the vast majority of our records come from a variety of different employers contributing, all the way from small business to large enterprise companies. We typically see and I'm going to call it a match rate. So whether or not that social security number is on our database or not, in the 85% range with the inquiries that we do get. So it's a very good match rate. Now, how we fulfill and deliver that back is based on the lender's choice of the product that they're choosing with the work number and what necessary information they need.
I think this is a very classic question to get as a credentialed provider as well, because there's the coverage components, and then there's also kind of the opt-in component, which coverage times opt-in gives you your hit rate as a credentialed provider. Today, Argyle offers roughly 80% coverage of the U.S. working population, and we see an opt-in rate of roughly 65 to 75% for a total hit rate of 55 to 65%. Now that'll vary depending on kind of your individual borrower demographic, as well as where we fall within that waterfall. But that's kind of the high level numbers there.
To add to that, so from EmpInfo standpoint, we offer a hybrid verification as a service platform. So what that really means is we do instant, and then we do near time, and then we so it really depends upon your SLAs. And what we have seen is typically, within the first day or so, we can get to over 50 to 60%, 50% in many instances in terms of what we call as fulfillment rates. And within 3 to 5 business days, we have seen to the north of 90, 95% as well.
And yeah, I would echo what others have said. So with a credentialed solution at MeasureOne, since we're not pulling data from our database, but rather directly from a primary source, the hit rate is as high as the employer maintaining up-to-date data about their employees and their payroll system. So by that definition of hit rate, it's near 100%. The bigger challenge and sort of what we pay more attention to is the hit rate at which the borrowers are sharing access to their account, which is our data source. So it varies. We have folks who see up to 90% hit rate in that sense. Sort of on average, it tends to be around 50 to 60% across the board.
Wonderful. Thanks. I appreciate everyone getting right to the answer using real numbers. I think everyone will appreciate that. A couple of just ancillary questions I want to jump into real fast here. It was brought up that the demographics of your borrower matters, the channel that you're originating matters, even maybe the origination approach, consumer direct versus traditional retail. Does anyone have anything else to add, and which segment of the market do we typically see higher adoption?
Happy to speak to that at least a little bit, potentially with kind of a credentialed provider hat on. I think the 80% coverage piece that I mentioned earlier, is kind of across the board. As part of that 20% that's missing today, there's a bit of a long tail of smaller payroll providers that we don't yet integrate with. So that's the kind of regional or localized payroll providers. And then, there is a segment of the population who don't get paid electronically, or their payroll doesn't live in an electronic system and, lives in a Excel spreadsheet, or lives, God forbid, in a kind of record keeping book. There is a top line with which we will not be able to automatically verify because of that. So I think to address some of the question, Tim, there is an upper limit to the total coverage you can get, because there's a limit to the set of electronic systems that are paying people today.
Yeah, that's really good insight. Where I wanted to zoom in on too was do you see a difference, for example, between younger borrowers, older borrowers? Do you see a difference between consumer direct versus retail consumers, providing info and reaching a hit for these records?
Yeah, so on the credentialed side, I would say, one of the components that impacts opt-in rate is certainly familiarity with credentials, right? And so as you think about folks who have a single sign-on for their employer, right, that's something that they use every day, easy to authenticate. Similarly, if you're a retail worker, deskless retail, and you're logging into your time and attendance system, which oftentimes is connected to that payroll system, right? You're authenticating in quite frequently to update your shifts, log vacation, view when you're getting paid next, that sort of thing. So I think we see, high uptake with those type of demographics. Folks who aren't interacting with an employment system, whether it be single sign-on or time and attendance, are probably going to have lower opt-in rates. I think that's generally what we see. But again, overall, we see opt-in of 65 to 75%.
Wonderful. Nothing else to add, I'll move on to the next question. Thank you. So if, so VOIE automation, right? That's where we want it to be, whether it's instantaneous, whether it's credential, but some cases it's going to fail. Not going to be a hit. And we keep on hearing about these new manual options that go above and beyond the traditional process we're all used to. Love to understand what every provider here is doing to help enhance the manual side when automation fails.
Tim,
I'll go ahead. Oh,
okay, go ahead.
Go ahead, Anir. No, go ahead, Anir.
All right, no problem. So I can certainly share with you the options that are available through EmpInfo. So when a lender is unable to verify instantly through a network, they can certainly demand what we call as our on-demand verifications. And the way to think about it is not a traditional legacy call center-based type verification, but it is the first, I would say, the fully automated workflow that replaces the traditional manual verification. This is what happens. So really, without any manual intervention, our platform immediately and actually simultaneously sends verification requests to the employers and to any employer, right? There's no queuing up of requests. It just sends it automatically. What employers see is, is they can securely provide the employment and income data as per, 1005 form, leveraging our app. It's an EmpInfo app, and EmpInfo then delivers that report digitally to back to those lenders. As soon as the employer submits the data within a fraction of the second, they have that information. And all of this happens with the process that embraces security, privacy, data accuracy, and again, removes all manual efforts for the verifiers. So bottom line is, what we do is we deliver, at a very high fulfillment rate, which we just talked about, in the shortest amount of time and in a very cost-effective manner. So there are customers that have chosen to optimize coverage and cost over speed if an instant hit is not possible as well.
So I'll jump in now, Tim, but I mentioned earlier about our match rate on the work number and whether or not we have that social security number on the database or not. And so outside of that, we do have a huge instant database that I mentioned earlier, but we do offer a manual offering too. We do understand that each verification is extremely critical to moving our client's process forward. And so what I always like to say, though, is what's perceived in the market as a manual approach. I'm going to use my air quotes here. The term manual is extremely outdated when you really think about what we do offer from a manual verification perspective. I like to refer to it as our smart technology design for these types of verifications. And just to give you a quick stat, 54% of orders that people make using our priority next day verification of employment solution are completed in less than 2 hours. And we're really able to do that because of this smart technology design that we've embedded within our manual verification solution. So I like to think of it, again, it's not close to instant, but it is near instant results.
So I'll go. So at MeasureOne, we see automation as a spectrum. Our objective is that we are able to fulfill every VOIE order that comes our way. So we start with a borrower connecting their payroll account. That is always the top of the MeasureOne waterfall, so to speak. But when that doesn't succeed, we provide a fallback option where the borrower can upload a document. So that is more manual for the borrower, but it's still automated for the lender because we're processing and extracting the data in that uploaded document automatically.
Yeah, slight piggyback off that. Argyle, in a similar way, has kind of a built-in waterfall mechanism within our own verification experience, primarily relying on those payroll connections when an individual credentials into their account. And then as a fallback, should we not have coverage or that individual doesn't want to provide their credentials, we have a document upload and OCR solution to provide structured data from that individual's uploaded document, whether it be pay stub, W-2, 1099. And we have our own internal solution, and we also have a BYOP, bring your own provider, in case you want to plug in your own existing OCR vendor.
I like that, BYOP. Never heard that one before.
Yeah, bring your own provider.
Information, guys. And, you know, the big takeaway for me here is manual is no longer manual. We're supporting additional technology and new insight and new methods of gathering this data, and what seems to be much faster than the traditional way of doing things. That's really cool stuff. So moving on to the next question here, we got a couple more questions. What are the differentiating value props across each VOIE provider solution? Love to hear just, you know, why people should give you guys a call. And by the way, audience, we'll make sure you have everyone's contact information on the last slide.
I'll start us off, Tim. So with the work number, I mentioned these stats throughout the webinar today, and I'm going to mention them again because I'm very proud of these numbers, but 2.5 million employers contributing to the database of all sizes. So small businesses all the way to those large organizations out there. And that contributes over 535 million current and historical employment and income records on our database. So wide coverage, wide network, wide distribution. And really, our solution is a seamless automation. We do not require private or sensitive bank credentials from borrowers. It is very instant, very frictionless, and we offer a seamless experience for the lender and really when you think about the borrower.
So I can go next. And thank you, Tim, for asking this question and giving us all an opportunity to preach about our company. So at MeasureOne, our coverage and the speed at which we expand our coverage is unmatched. So we connect into over 7,000 unique data sources. We're adding about 25 new data sources per day. On average, that's an order of magnitude more coverage than most of our competitors and even more data source connections than Plaid. Our tech is also data domain agnostic, so we can quickly connect into different data types. So for example, we just launched a proof of homeowners insurance solution as a new feature for our platform with 85% market coverage. That was idea to production in a month and a half. So we believe this positions us as a true one-stop shop, not just for VOIE, but for all your consumer data needs.
Happy to take this one from the Argyle perspective as well. I think, you know, Yaron spot on with respect to the coverage piece. I think, you know, 80% coverage is something that we're very proud of and will continue to be proud of as we expand that. I think like the different flavors of, you know, income sources that we plug into are also quite interesting, where, you know, certainly all of the large and even small payroll platforms, as well as employers that have their own proprietary platforms like the Walmarts of the world. But also, you know, as you think about the growing gig economy, we plug into Uber, Lyft, DoorDash, kind of the full spectrum there. We plug into creator platforms. We plug into Social Security Administration, unemployment. So as you think about the variety of different ways where an individual can receive income, we're super excited about kind of the diversity of income sources that we can incorporate as part of the platform. I think also as a credentialed provider, you know, there's two other things that we think about as large differentiators. One is as kind of just transmitting data, we can provide a very low cost economical solution. And then the last piece is we actually can get continuous access, a borrower's permission, continuous access into their employment accounts, such that you can easily do a re-verification with a very frictionless, no cost experience.
All right, so you know, EmpInfo, we are a tech company, and we've been delivering VOEI to the mortgage and lending industry for now over 11 years. So we've been around since 2011. Our platform is a verification as a service platform. That's what we call it. You know, it serves to be the one-stop shop for both instant and on-demand verifications that requires direct reach out to employers. So our data is sourced directly, as I mentioned before, from directly from employer systems, requires no borrower credentials, and it delivers the data elements in aligned to the GSE requirements. So as part of being a one-stop shop, we offer an automated way to reach out to the 6 to 8 million small businesses, medium enterprises, large enterprises, when instant hits are not possible. And the way we do it is through our app. It's a secure app. We reach out to these employers, and what we also do is we encourage these small business employers to automate the next verification with us. So what tends to happen is our hit rates for our instant keep going with the more on-demand verifications we do. So our platform is flexible, it's optimized, as we talked about before, for cost, speed, and coverage. So we can configure our platform based on your business needs.
Thank you, everyone, for answering those questions. Again, I don't envy the position you guys are in. It's a co-opetition environment. I'm also very proud, and I just want to make note of this again. We have competing vendors working together on the BeSmartee VOIE solution, best breed, and cooperating to deliver value to the consumer, to your business at the end of the day. That's the type of leadership that we need in our space. So I really appreciate you guys doing that. Last question, then we're going to go ahead and close out. What changes are coming in the future to the BeSmartee VOIE waterfall solution? And I will go ahead and take this. I'll keep it kind of short. So the first thing I'll say is we're always on the hunt for the best providers out there. If someone's got a data source that's new, no one's got it, we want it, and we want to bring that over to you. All the providers on this page here, what you also notice is they have amazing new manual verification systems. That's being planned in the VOIE waterfall for BeSmart as well. So you can take advantage of everyone's new approach to the traditional manual verifications that we've come to not love and not want anymore. So those are the two things that are going to be most immediate. With that said, we're going to go ahead and go to the last slide here. First off, I want to thank everyone for taking their time out of their day for joining us, especially the audience and especially our participants here on the panel. Again, we have Ashley Wood, Vice President Mortgage Verification at Equifax. Thank you, Ashley. We have Conor.
Thank you, Tim.
Hendershot. Thank you. We have Conor Hendershot, Director of Mortgage and Banking Solutions at Argyle. Thank you, sir.
Good to be here.
We have Yaron Oren, Chief Revenue Officer at MeasureOne. Thank you, Yaron.
Thanks, Tim.
We also have Anir Pradhan, the COO at EmpInfo. Thank you, Anir. So on the screen, everyone's email is there, including myself. Feel free to write it down. We'll leave the screen up for a few minutes. Write it down, contact these amazing partners of ours. And if you're short in time, contact sales@besmart.com. We're happy to talk to you about our VOIE solution and to connect you to these wonderful providers that you're going to want to talk to. With that said, thank you, everybody.
Thank you all.